Since 2023, the crypto market has shown a clear sign of picking up. The price of Bitcoin has risen from $16,500 to $23,000 in early February, around 40% increase. Many altcoins have also skyrocketed, such as APT and especially the AI track token AGIX, which their prices have risen by about 5 and 8 times respectively. As a concerned investor, how can I get back to the warming market again? Since we have storage, privacy, gaming, AI, with so many new tracks in the blockchain to choose from, which of these are most likely to spark the market of 2023? Hello everyone, this is BHertz, a regular industry and project analysis about the crypto market channel. Remember to subscribe and open the bell for notification before we start. Last October, the airdrop launched by Aptos became a big hit in the bear market. 2,008 million APTs were airdropped to 110,000 participants. Based on the closing price of around $10 on 17th October, the amount of airdrop per capita was over $1,800. After that, APT's price fell as low as $3 at one point and rose dramatically up to $20 by the end of January 2023. Public chains are an indispensable infrastructure for Web3, but have been facing efficiency and cost issues since the birth of Ether. So while Ether is slowly transitioning, new public chains are constantly emerging to challenge it. Solana, once known as the Ethereum killer, was the king of the new public chain. Early on, Solana benefited from greater efficiency and low fees to expand rapidly. Solana ranked third in TVL, behind only the Ether and BSC in November 2021. However, things changed after rapid growth. Solana gradually revealed stability problems and suffered a number of downtime incidents. For now, Solana has slipped to 12th in TVL. Aptos is one of the new public chains currently under the spotlight, but whether it can take over from Solana will be a test. Let's see. Equally anticipated as the new public chain we talked about before will be the Layer 2. Take Ethereum as an example. The Ethernet itself is Layer 1, and by transferring some of the data to Layer 2, the processing capability of Layer 1 can be increased while reducing costs. Layer 2 has been in development for so many years, and developers have continued to come up with new solutions to Ether's performance problems. Rollup is a spin-off from its Layer 2 processors and is currently the popular Layer 2 solution. Specifically, the Rollup program is divided into OP-Rollup and ZK-Rollup. Typical representatives of the OP, such as Arbitrum and Optimism, both made the top 7 in TVL. ZK-Rollup is more difficult to deploy, so progress on related projects has been slow, but still was to wait. Anyway, Layer 2 are more than that. Different solutions have their own focuses and correspond to different needs and application scenarios. L2Bit data shows that after last October, Ethereum Layer 2's TPS has steadily surpassed Ether's, with Ether's TPS at 12.3 on February the 1st, compared to 17.3 for Layer 2, significantly increasing Ether's processing capability. So, we are very much looking forward to Layer 2 in this year. For questions on how we can participate in those projects that have not been issued tokens, just don't worry about that. It's just the right time to join in from testnet to mainnet or by establishing nodes, similar like the public chains. So many happened in last October, along with the Ether merger. Ether's consensus changed from POW to POS, and ETH became a deflationary asset, providing the impetus for market capitalization growth. The ultrasound.money data showed that the supply of ETH had decreased by 7,770 in the last 141 days. And if Ether kept using POW, we would have seen an additional 1.64 million ETH increased. The current annual yield on ETH staking is around 4%, with around 40% of the ETH supply being staked. In comparison, most other public chains have stake ratios of over 40%, and there is room for further growth in ETH staking if we refer to the stakes of other public chains. There are already several service providers in the market today offering ETH liquidity staking, and the yields vary from different providers. In terms of market share, Lido now dominates, but there are still opportunities for other protocols to challenge for more. Also, of interest regarding Ether stakings are DVT and secondary staking. DVT refers to Distributed Validator technology. The Ethernet roadmap shows that DVT will be the next key after the Ethernet merger, solving problems such as centralization and single point of failure. A representative project for secondary staking is EigenLayer, through which ETH staked by an Ethernet validator can be used to protect other networks, while the validator can earn additional income by making secondary stakes in other protocols. But the risk is that the verifier needs to give control of the staked ETH to the secondary staking protocol. AIGC refers to artificial intelligence-generated content, has recently exploded with ChatGPT, an AI chatbot developed by OpenAI, which has registered over 1 million users in only 5 days, and with Microsoft planning to invest an additional $10 billion in OpenAI. The boom has also brought with the AI track, and the price of AGIX since 2023 has risen by about 8 times. Both AI and blockchain are the most popular emerging technologies today. AI will also be an integral part of the construction of the next generation internet and metaverse. More and more blockchain projects are being integrated with AI. The explosion of AIGC may provide more ideas, but so far, the AI track is relatively new and is not widely used in the cryptocurrency projects. According to the CoinMarketCap's classification, there are only 131 projects related to AI and big data out of 22,000 cryptocurrencies, and none of them are ranked in the top 50 in terms of market capitalization. Even for the hottest crypto AI projects at the moment, there are very few eco projects, and it is known whether they will grow in the future. NFT achieved explosive growth in 2022 and affected by the bear market later year. The heat of NFT has plummeted. However, as the NFT industry becomes more mature, the market, NFTFi, and other related tracks are also evolving. In 2022, a number of potential NFT projects has shown up. In the first of the year, X2Y2 surged to become the second largest NFT marketplace in terms of trading volume, reaching $117 million in July 2022. Blur was a late starter, but has risen quickly in a short time, even replacing OpenSea as the largest NFT trading platform in December 2022. While OpenSea has dominated the market for most of the time, all signs point to the landscape remains undecided in this area. There are a number of reasons behind Blur's rapid rise to prominence, but responding to market trends and introducing superior products has been key to Blur's ability to succeed. The success of Blur will also promote the NFT industry. Only with more good products and better infrastructure can NFT be supported in long term. In addition to the NFT market, NFTFi sector is quickly expanding in 2022. Suppose that you are bullish on the prospects of some blue-chip NFT but don't have that much money to buy. How can you take advantage of the trading opportunities? This is the time to go long or short the floor price through a number of NFT derivatives platforms. These platforms give investors with small capital volumes the opportunity to participate in blue-chipped NFT. It is also possible to screen projects with potential in terms of product innovation, user experience, and market share. The past year has been a tough year for the crypto industry, but we can still see great prospects. In the future, as global liquidity improves, cryptocurrencies will see a more benign development cycle. And all we need to do is to identify tracks and projects with potential before the bull market comes. That's all for today's video. Which tracks do you think will be the top ranks this year? Feel free to share your thoughts in the comment section. See you next time.